The EBRD's Trade Facilitation Programme, or TFP, is an award-winning trade finance scheme. It promotes trade to, from and between the bank's countries of operations. The programme has facilitated thousands of transactions worth more than €12 billion, covering goods ranging from energy-efficient machinery to pharmaceuticals, textiles and consumer goods. Over 100 banks across the EBRD region participate in the programme, cooperating through the EBRD with 800 confirming banks around the globe.
Welcome to this trade finance presentation brought to you by the EBRD TFP Trade Facilitation Programme. And today we are talking about a very serious subject. We're talking about the impact of Covid-19 on international trade finance operations logistics. The ICC Banking Commission has just now brought out a guidance paper on the impact of Covid-19 on trade finance transactions issued subject to ICC rules. A very important guidance paper that you need to get familiar with, you need to download, you need to read it, but it's not so long, just 17 pages, because remember, short is good. In this guidance paper, it commences with a disclaimer. An ICC disclaimer: ICC endorses no responsibility in this guidance, which is aimed only at sharing practical views and guidance. Now, this paper of 17 pages is full of practical guidance and expertise, and you need to become familiar. The paper moves on and it opens up with an executive summary at point 1. And in the executive summary, we see that it links back to the volcanic eruption in Iceland of 2010. And you will recall that aeroplanes were not able to fly, documents were not able to be delivered. It even had some impact on the global supply chain at the time. Now we're in a much more serious situation. So much so that a question has now arisen as referenced in the guidance paper. An important question: whether or not banks may apply force majeure as a defense against non-performance. So important, I'm going to repeat it. The question has arisen, which had not been considered, as you see in the paper, whether or not force majeure can be applied as a defense by banks against non-performance. The paper moves on with a joint statement from the ICC and the World Health Organization outlining the seriousness and the significance of the current pandemic disaster. The paper highlights that it is an immediate priority that businesses, including banks, your bank, should be developing or readying business continuity plans, given the current challenges we are seeing. In the paper as well, it also makes the point that the situation is similar to that experienced in 2010. Banks are generally open for business despite being at reduced strength capacity and delivering the services in different ways than we ever did before. But the paper highlights that the same operational conclusions should apply. But now we're dealing with a very large global situation, and the question of force majeure comes into focus. In the paper, we have section 3, force majeure, and this is brought in or introduced by the ICC force majeure clauses. And the ICC force majeure clause basically relates to a force majeure event. Force majeure event: an event that prevents or impedes a party from performing. 3 dimensions, 3 features, A, B, C. Impediment is beyond the reasonable control of a party. The impediment could not reasonably have been foreseen, and the effects of the impediment could not reasonably have been avoided by the related parties, the parties involved. And of course, the paper highlights that the applicable law may have different requirements as explained below. Different requirements, and then of course different implications, and of course different law, different jurisdiction, may be possible different results. But remember, ICC are rules of practice, they are global rules. So turning to the rules. The paper highlights that each of the ICC rules contains an article on the concept of force majeure. Now, these rules, UCP 600, URDG 758, URC 522, URR 725, EUCP, URBPO, are rules of practice. And sometimes it's said that these rules contain force majeure rules, as we can see listed on the document here. But as a seasoned practitioner, I can tell you that there are really no force majeure rules within the rules. The focus is very narrow, but very important and well thought out. All of these rules deal with one thing, and you can see it highlighted here, interruption. And we see it UCP, interruption of bank's business. URDG, events beyond the control of the guarantor or counter-guarantor that interrupt. URC, interruption. URR 725, interruption of reimbursing bank's business. EUCP, interruption of a bank's business. URBPO, interruption of an involved bank business. Now, interruption of a bank's business is most often manifested in closure of the bank. But not exclusively closure of the bank, but for our purposes, please focus on closure of the bank. Closure of the bank, so presentation can be not made, or maybe presentation was made but cannot be examined, or maybe a presentation was made, it was examined, but the payment has not been effected. So the rules have specific provisions. Follow the guidance, it's very, very useful. Now, ISP 98 for standby letters of credit is not actually listed on this page, as you can see. ISP takes a very pragmatic approach to this subject and does not use the words force majeure at all, because it was felt by the drafters a bank should not be having to second guess what is force majeure, what is not force majeure, maybe it is force majeure, maybe it's not force majeure. ISP 98 deals practically with the very clear concept of closure of the bank. So, simple example, closure of the bank. Beneficiary was to present documents or a demand, but he cannot because the bank is closed on a day when otherwise the bank would be normally open. So ISP 98 has specific clear provisions which are leaning towards protecting your customer, the beneficiary, something you need to be aware of, and be sure to ask us some questions. Moving on in the paper, we move on to section 4, Modification of ICC Rules. The guidance gives good guidance in that it tells us that if the rules apply to a trade finance instrument, all the rules apply to the trade finance instrument. So letter of credit, UCP latest version, all 39 articles of UCP will apply. URDG applies to an instrument 758, all 35 articles of URDG 758 will apply. But this section highlights the parties can agree to modify or exclude certain rules. But again, it highlights, and it's strongly recommended, that the parties think carefully about this, that careful attention is paid, and professional advice is sought. That is very good advice, and we're standing by to hear your questions and give advice as and when you need. Section number 5 deals with possible alternative solutions to having to present paper when the paper is locked in the supply chain, courier's not working, shipping companies not working. This is a significant section, and it gives some good advice and guidance. In fact, for example, if the paper documents, original documents, could not be presented, well then maybe electronic documents, scanned documents, PDF can be presented. And remember, under EUCP, a PDF qualifies for an electronic record. So for example, the original paper documents cannot be presented at the confirming bank. Maybe PDFs can be presented. Maybe then that the nominated confirming bank can send an authenticated SWIFT to the issuing bank confirming that the documents were presented. But of course, the best way to do this is to ensure at the beginning, at the outset, it's included in the terms and conditions, or if not, subsequently an amendment is issued that includes this in the terms and conditions of the credit. Of course, this section, as you would envisage, also makes reference to EUCP, the electronic supplement for presentation. EUCP, as you know, has not been widely used, but maybe now the current situation will be a positive tipping point for the application of EUCP. And my friends, then the next section is section 6, scenarios currently experienced in the delivery of documents. Now for me, this is the high point of this document. An excellent document, but this section is really good. What happens when the documents cannot be presented to the nominated confirming bank? What happens when documents are presented, but the bank is closed, cannot be examined? What happens when presented, examined, but maybe not paid, due to the bank being closed, and the implication? What happens if the documents are sent from the nominated bank to the issuing bank, but they get lost in transit? This section is very practical. Of course, it does not cover everything and every possible scenario, but there will be a follow-on opportunity to submit questions, follow-on frequently asked questions, and this is coming, so watch this space and we'll be very, very happy to hear from you. Section 6, Scenarios Currently Experienced in the Delivery of Documents. Well, my friends, that's it. That's basically it. The guidance paper on the impact of COVID-19 on trade finance transactions issued subject to ICC rules. The guidance paper contains a disclaimer from the ICC. My presentation today contains a disclaimer, cannot cover everything, but we are really looking forward to hearing from you, working with you on this, and I just want to say thank you to the TFP of the EBRD, and most of all, thank you participants for your valuable time and attention.
For us, your comment is a kind of window into opportunity that we will send, and we will try to reach the document, to reach the banks until the country is under full lockdown with closure of the mandatory closure of the banks. So we will be maybe quicker in packaging the documents into envelope and sending it before we have the news about the closure of the country.
Vincent, thank you so much for taking time to join, to share the knowledge with our trade finance talent in Ukraine. And I'm very much looking forward to see you at many, many more events at the moment online.
Great. And following this, we will share with everyone, today or tomorrow, we will share the guidance paper. We will share the IIBLP Professor Byrne's explanation, force majeure under ICC rules. And we'll also share my video presentation on the guidance paper. And then, of course, we'll be welcome to taking more questions as we can. Thank you very much.
Дуже дякую, шановні колеги. So nice to see you all smiling. I'm sending you all big hug. So those of you who are interested to join an Uzbek dance class on Sunday, it's my birthday on Sunday, please join. You don't need to, because from Ukraine it would be difficult to make payments, so you don't need to pay. Just message me, I will send you free access on Zoom. And we will have a dance class by Prima Ballerina from Uzbekistan. It's a 30-minute dance class, so join in on Sunday.
The EBRD's Trade Facilitation Programme, or TFP, is an award-winning trade finance scheme.